Hey everybody, welcome to Young Money Investments. In today's video, we are going to be talking about my top 3 strategies to conserving capital and shorting with a set, sound, short strategy. Now, obviously, as you know, watching my videos, I have definitely had some trades where I've been a little bit more risky. In this market right now, we have seen some crazy multi-day runners, multi-day grinders, whatever you want to call them. We've seen stocks run 200, 300, even 700% in 1 to 2 days. In today's video, I'm going to teach you how to be able to avoid the pitfall and the trap of getting into a short too early and watching these big whales just run the price up on you and causing a lot of short sellers to actually blow up their account. In today's video, we're going to focus on all that. Let's get to it. All right, guys, so like I was saying, one of the crazy things in the market lately is usually you see the summertime being a slow time for penny stocks, for large caps. A lot of the big players in the industry end up taking vacations. They go on their yachts, they're enjoying their beautiful vacations, while us peons end up staying here trading and trying to make a couple bucks. So we're going to talk about how we are able to actually make a little bit of money during the summer months. Now, one of the crazy things that we have seen this summer so far is that there has been a crazy run up in a lot of these penny stocks. IPOs are huge right now and they are running astronomically. Like we're talking like 100, 200, 300% from an IPO. Like that is just insane. That is not normal. So if you're just getting into the stock market, that's not normal, I promise you. Let's take a look at some of these tickers though, and I'm going to teach you my 3 main strategies that I have been using and employing right now so that I am not getting trapped in a short position, and also how I'm able to scalp some of these long positions, because it's almost weird. It's almost easier to long some of these companies right now than it actually is to short. Can you believe I'm actually saying that? Let's take a look at the charts. So taking a look at ticker symbol MLNT, you can see that this was a ticker that was ran up from about $1.94 to in 1 day ran up 260, 270%, all the way to highs of about $8.20. I mean, we're talking a 320% run. And I'm going to talk about how to avoid getting stuck in a short early on, because if you were to get in on this and short this right in here at the pre-market highs, you're looking at about 132% run. Definitely, if you would have seen this on your pre-market scanners, you know, like I said, seeing a 130 plus percent run, this would usually be a great opportunity to get into this company and actually take a short. Now, the reason I did not get into this is because as you can see, I have a very big strong rule of not shorting right at the morning open. I just don't. I mean, this definitely would have made you a nice little profit. I mean, we're talking 17, 18%. I mean, if you didn't perfectly get into it, you're still talking 10 to 15% of a return. And then you would have got your pants lit on fire. So right here, you can see this sucker ran all the way over 54, almost 55% over the course of maybe 15 minutes. And then you see the doji and you see this bad boy start to come down. Now, as you can see though, it did come down to VWAP, but then it started to trend up and started to form this cup and handle, and it continued to run. This is a very big problem. One of the big problems with MLNT as well is if you do try to take a look here on the 1 year chart, it is a downward pattern, definitely, right? Like this is not a good long-term hold or a long-term position. But the problem with this though is when anytime you get this much volume into a ticker because of the hype and momentum, especially right now in the summertime, you're going to see this thing continue to run. And so I was able to avoid this. Big reasons I did was because I'm not shorting the first green day. That is going to be my biggest first thing I do not recommend doing, is do not short the first green day and do not short at the opening. That is just it. You're opening yourself up to really getting squeezed. And if you looked at the level 2 on MLNT, you would have seen that there was massive 5,000 and 6,000 share bids that were being placed on the long side even as it was dropping. That is a sign that a lot of the big money players, the whales, have a stake in this and they are going to start pushing it higher. The other problem was there was not enough locates. Short locates were actually getting eaten up on this, and that is a very strong sign again of some manipulation on the long side, that they are going to most likely try to push this thing up and run it even higher. So as you can see here, taking a look on the charts, it did break above VWAP. That's going to be my other second big rule, is do not short above middle VWAP. You want to be shorting on the downside, making sure that it's trending down and holding down. As you can see, it kept running throughout the day, made its peak right here, and then did start to fade during pre or post, after hours trading. And then we get more volume coming in pre-market, pushing this thing to all-time highs, where we then did see a slight pullback. We're talking a nice pullback of about 35%, but the damage is still being done. If you were still, it's closing where, most people were just getting the crap squeezed out of them up here. So, this is still not a good place to be in MLNT, even if you had to hold this through 2 days, pay all the short fees, pay all the hard to borrow fees. The locates are going to be very expensive, especially in Trade Zero, where I have a 7x for my first day overnight. You would be paying a lot of money to your broker or whoever you're using, Speed Trader, Cobra, Centerpoint, you name it. You would be paying your broker a lot of overnight fees to hold this thing, and then the locates just get even more expensive, I'm sure, on the second day. But again, on the second green day, you see where we start to really see this thing start to take a tumble. So do not get in on the first green day. That's one of the bigger important things. And another thing is you need to see this volume fading. Volume is actually starting to fade here, whereas over here, this volume is not fading. Yes, it faded to an extent. During the lunch hour, zombie hour, it is gonna die out. And then you get everybody coming back from lunch and you start to see a ton of that volume really start to push up. Let's jump into another example. ARQL is another great example of why you do not short the first green day. Now you see this thing run from 583. Again, this isn't a massive pop. We're talking about a 60% run, but you would think that this thing would very easily come back down to 583. And what we've seen with this ticker is that it has not. We're talking about 1, 2, 3, 4, 5 green days in a row where this thing still is not coming down. Now, again, yes, we did see this thing fade. We're talking about it did break below VWAP. This would not be a bad short right there, but that's only a 6% return. This is the problem with shorting ARQL, is that if you did short up here towards upper VWAP, you're only talking about a 7% return if you got out perfectly. In reality, we're talking about maybe a 5% return on this thing. 5% is not going to be enough for anyone that is shorting a stock. 5% is really not worth your risk to reward. The reason why I say that is because you have locate fees. Your hard to borrow fees are expensive. The ability for these things to continue to run is still very high. You need to learn risk management and patience with that. And so if you're taking a trade where you're only going to be able to make 5% on it, 10% max, you're not in a great position. I like to see anything from 10+%. 10 is my lowest percentage of profit return, all the way up to 20 or 30% potential for return. That means that if I take half of that, I'm still looking at a 15 to 20% if it runs 30, 40%. Next thing with ARQL is you see that this volume, yes, it did fade, but the stock price is not getting any drop. That is definitely a telltale sign that it is time to get out of this. You don't want to pay the locate fees. You don't want to continue to hold through the night. And again, we see a massive volume spike. Volume does start to fade, but it still is holding up. That is a high probability or a high indicator that this is going to be a grinder. It's going to be a grinder. Don't be a bag holder as a short seller. That is a problem for you, and it is not going to fade or just start dropping like you need it. It's going to start eating up your account in fees and everything. So again, big no-no with that. Last but certainly not least, one of the craziest runners this week was KERN. We have seen KERN run from $11.10 all the way up to $80. We were talking a 540% run. I think if we even went back a little bit further, that's just, it's insane. That kind of a run, 500+%, is just, it's astronomical. And again, the problem with this is if you do zoom in, taking a look here, you start to see the pop, it's trending right below VWAP, and then you see this where it continues. Do not try and short these things below VWAP. It is going to hurt you. It is definitely going to hurt. And so as you can see, it continued to trend up. The volume comes back. You come back from power hour where the volume does fade out, and then you see this thing continue to push. If during zombie hour, during lunchtime, if the volume dies down during lunchtime and it is still holding, and then it starts to creep up on you like this, that is a sign as a short seller you need to get out of these positions. don't continue to hold it. The problem with a lot of people right now is, and especially myself, I'm normally trading for the macro movement. Macro movement meaning, yeah, there's going to be some spikes, there's going to be some pops, but at the end of the day, I know this company is going down. The problem with these right now, though, is they're not really going down. They're continuing to run. They're holding above middle VWAP. The volume is not just, dying out and they're just fading away and going away. There's a lot of manipulation going on, and you need to be aware of that in order to not get caught as a short seller. You can also even identify these patterns as a long trader, going long on these positions. You can do that as well. You just have to think reverse of the things that I'm teaching you right now. And I'm going to throw one more ticker symbol at you just to kind of give you a little feeling of what might be a good short position, and that is actually going to be ticker symbol CTRV. Now, CTRV, if you do take a look at this thing, it has had a history of morning spikes, and then it fades down. Morning spike, fades back down. Morning spike, fades back down. Morning spike, fades back down. This one was like a close spike. You can see where it spiked into the close. But this was another great one that continued to spike up in the morning and then would fade back down. This type of history, this type of pattern where it does not hold its gains, the volume, as you can see right here, volume fades throughout the day and the candlesticks fade with it. Again, spikes, fades throughout the day, spike, fade throughout the day. This one spiked at the end. There wasn't really volume there. You wouldn't have wanted to take that short anyways. Again, volume spiked pre-market, take it down throughout the day. Volume was still there quite a bit throughout this day. There's definitely some movement and everything, but then you do see this massive offering, and then that's where you get the massive gap down. Again, that's a nice little 30-40% return. If you held this sucker all the way from 19 down to here, you're crushing it. You made a ton of money. But the reality is even if you shorted right in here at 15 and got out here, you're talking about a 36% return. So this is a great example of where you would see this thing starting to break down below VWAP. You can use your RSI indicator. That's another great indicator to use to make sure that this kind of fits the patterns. But really paying attention to not shorting above the middle VWAP, being patient, not shorting right at market open. Those are going to be some of your key strategies that you need to do in order to be profitable right now in this market. Now, I wouldn't have necessarily wanted a long CTRV, but a lot of these companies that I was talking about definitely had some long potential, and we're seeing more grinders, more pushers, more long action, and more profit on the long side right now than we are on the short side. CTRV was kind of an exception to the rule where that fit my strategy, fit what I like to do, and I would have actually really liked to take a position on that, although I did not any of those days. Too late for me, but it's okay. I'm really doing a lot of research right now. So I hope you found this video helpful. If you've not yet, hit that subscribe button, hit the thumbs up button. It helps me out a ton with the algorithm. And if you are interested in opening up a TradeZero account, well, if you open it up with my link below, you get like a $25 to $200 like bonus for doing that. And if you're interested in my course, my mentorship, any of that stuff, links are all down in the description. I hope you found this video helpful. I really have found these strategies to be so crucial in being successful shorting in the markets right now. The markets are crazy, the markets are difficult, but you can do it, that's for sure. Catch you in the next video. Talk to you guys later. Bye.